Hello friends, in this video we are going to compare and do fundamental analysis of two of your favorite specialty chemical companies, Vinati Organics and Aarti Industries. I have chosen these two companies based on the poll which I have conducted in YouTube community. So if you are not participating in the polls which I am putting, please do check out the YouTube community which is now active on my channel, and based on your suggestions I will be making the future videos. If you haven't subscribed to my channel, please do subscribe right now and activate the notifications by hitting the bell icon, and watch this video till the end, because at the end of this video you will be able to decide which company among these two is better to invest. I am Varun Agarwal and let's get started. I'll just give you a brief introduction before we start comparing. Vinati Organics is a specialty chemicals company. It's a global leader in two products, one of which is isobutyl benzene IBB and ATBS. Aarti Industries also is a specialty chemicals company, but it is also supplying chemicals to pharmaceuticals, and Aarti Industries products are used in manufacture of pharmaceuticals, agrochemicals, polymers, additives, surfactants, pigments, dyes, etc. So this is a little more diversified. So let's get to the first comparison thing. So the first one is market capital. Vinati Organics market capital is 10,725 crores and Aarti Industries is 17,100 crores. So in terms of size, Aarti Industries is a bigger company when compared to Vinati Organics. Next factor is the price. The last traded price of Vinati Organics is roughly around 1042 rupees, and 52-week high and low is 651 to 1196. So Vinati Organics is almost trading at the 52-week high price. It is just about 13% less than the 52-week high price. Aarti Industries is trading at around 980 rupees, and the high low, 52-week high low is about 668 to 1192, and it is trading about 17.6% less than the 52-week high price. So if we just compare on the basis of the trading price, Aarti Industries seems to be trading at a lower price than Vinati Organics from the point of its 52-week high. But this is not the criteria to take a decision. This is just a comparison to understand the trading price position right now. The third factor we are comparing is the price earning ratio and the price to book ratio. Vinati Organics PE is 31 and Aarti Industries PE is 33. So both of their price earning ratios are roughly the same. In short, what is price earning ratio? If you check the profit of the company divided by the number of shares, you get the earning per share. If you divide the current price which is trading in the market, divide by the earning per share, you get the PE ratio. So PE ratio is the number of times the earnings your price is there in the market. So this will indicate how much is whether the price is expensive or cheap. There's another video on PE ratio which I have created separately. You can view that to understand in detail what is PE ratio. Price to book ratio is 10 for Vinati Organics and Aarti Industries is 5.9. So price to book ratio is price divided by the book value. What is book value? Total assets minus total liabilities. It will give you the net worth or shareholders funds, the equity capital, reserves and other things. So that divided by the number of shares will give you the book value. So price, the current price divided by book value will give you the PB ratio. So PB ratio of Vinati Organics is 10, so it is more expensive if you look at from the PB ratio point of view, and Aarti Industries is cheaper from PB ratio point of view. Now let's compare the sales growth. The average sales growth of Vinati Organics in the last 5 years is about 11%, and in the last 3 years it is about 23%. So the last 3 years it has been performing much better than the long term. Aarti Industries in the last 5 years has been giving a sales growth of about 11.3%, and in last 3 years it's giving about 16.7. So even Aarti Industries is growing faster in the last 3 years. But overall, if you see, Vinati Organics sales growth appears to be much better in the recent times than Aarti Industries. Now let us compare the profit growth. In the last 5 years, Vinati Organics profit is growing at an average of about 30.7%. In the last 3 years, about 35.4%. Aarti Industries profit is growing at an average of about 27.8% in the last 5 years, and the last 3 years it is growing about 24.5%. So in terms of profit growth also, Vinati Organics is growing faster than Aarti Industries. Now let us see the returns. Ultimately, why do we invest in stocks? To get better returns. So if we compare the returns in the 5 years, Vinati Organics has given about 272% returns, which is a very good return. Aarti Industries has given 554% returns, which is much better than Vinati Organics. In the last 1 year, if you see, in spite of the lockdown, after taking the lockdown effect into consideration, Vinati Organics in the last 1 year is around 3% down right now, and Aarti Industries is about 10% up. So in terms of returns, Aarti Industries has given much better returns than Vinati Organics in the past until now. Let us compare the debt. Vinati Organics is a debt-free company. Aarti Industries has a debt of about 1788 crores and debt equity ratio of about 0.62. Generally, I suggest people to prefer companies which are free from debt, because if they are earning sufficient profits, then there shouldn't be a requirement to have loans or debts until and unless they are going for a very big expansion and they need temporary funds. So in terms of debt, Vinati Organics wins the battle as it is a debt-free company. Now, one of my favorite criterias here is the intrinsic value. If I calculate the intrinsic value of Vinati Organics, it comes to about 725 rupees, which is about right now, if we compare the present price of Vinati Organics, which is about 1100 rupees, that is almost 1.44 or about 1.5 times the intrinsic value. So it is a little expensive than the intrinsic value. In fact, Aarti Industries also, if we compare the intrinsic value, is about 668. So that is also around 1.47, which is about 1.5 times more than the intrinsic value. Since the specialty chemicals and pharma stocks have grown pretty well in the recent times, so they are trading more than their intrinsic values. But I prefer to invest in companies which are less than their intrinsic value. So you should be waiting for a little fall in these companies, or if you have a very long term perspective, the intrinsic value also will change depending on the growth and profits the company shows. The intrinsic value will become higher and the present rates may become attractive and reasonable to invest. In terms of net profit percentage, Vinati Organics is earning 25.5% and Aarti Industries about 10.6%. So Vinati Organics profit margins are much better than Aarti Industries. Coming to the last criteria, the return on equity and return on capital employed. So Vinati Organics is giving a return on equity of about 30.5%. Aarti Industries is giving on return on equity of about 23.62%. So in terms of return on equity, Vinati Organics is giving better returns of the money which is employed in the company. In terms of return on capital employed, it is giving 45.79% and return on capital employed of Aarti Industries is 18.5%. Return on equity is the amount of return or profits they are getting when compared to the equity capital which is invested. Return on capital employed includes the debts and the other shareholder funds also. So that is the difference. So if we compare these criteria also, Vinati Organics is giving better return on the capital employed in the company. So I will stop for a few seconds here and I want you to comment as per you which of these companies are better, and leave your answer in the comment below. Now coming to the conclusion, from my view, Vinati Organics looks better as the sales growth is higher, profit is growing faster, it is given lesser returns until now, good returns but lesser when compared to Aarti Industries, but I feel it has a bright future. and it is earning better profit margins when compared to Aarti Industries. It has no debts and it is giving better returns on capital. But in terms of valuation, when we look at the intrinsic value, I feel it is slightly expensive. And this particular case study is an overall analysis which we are trying to compare all the major key points, but it is not a conclusive analysis. Other factors like the recent growth of the company, there are other future plans, their goodwill, and certain other prospects are also to be considered when you take your investment decision. So thanks for watching this video. I hope you like it. If you want me to compare other companies, do leave the names of those companies in the comments below. I would be happy to create videos on them. Thanks for watching and have a great day. Do subscribe to my channel and don't forget to hit the bell icon.